Hello everybody, hope you're having a great day. Today was another fantastic day in the stock market. The Dow was up 1.55, the S&P ended up 2.07, the Nasdaq triple Qs were up 2.64, and the Russell or IWM was up 2.17. The market opened on fire and then it slowly melted up right around power hour. We got this nice little 0.75% dip, and then we rallied to the close, and it was just one of those absolutely beautiful days. You could see here Google was up 2.32. Apple, in my opinion, led the charge. It was also up 2.32. Amazon had a fantastic 4.03% increase, and Tesla, one of my favorite day trading stocks, was up 7.43% and closed at 707.73. Retail started making a comeback. Walmart was up 2.13, and the financials, they just were beautiful. Bank of America 2.32, JPM 1.73. I do want to cover a couple of the charts that I posted this morning, just so you see where we are with those positions. I do believe that where Apple goes, the market goes. And as you can see here, the next line of resistance I have is around that 147.36 line. Once we get that past that 147.36, we do have the 20-day moving average right around 149. Today we did close above that downtrending channel that we had been forming, and it was a really nice move for Apple. It was very good to close Apple over that channel, but we still needed to close to open outside that channel and close above that channel. Ideally, we would like a break of 147.36, and if we can go over it, come back to test it, and then that would give me confidence that we're going to continue to go back up. These are the lightning bolts that you keep hearing me talking about on the Discord. 1, 2, 3 pattern. Any one of those. If you say any one of those, I'll recognize it. With JPM, like I said, the financials broke out pretty good. JPM got up to the 50-day moving average. It has a long way to go to get back up to the 200-day moving average, which is up over 150. That's a long way to go to catch back up to where it was. Now, I do expect JPM, because of higher interest rates, the banks do make more money, so I would expect JPM, Bank of America, Wells Fargo to start retracing back to its back to their highs. But you could see this is what I see as the likely pattern is we continue to go past over that 50-day moving average. The 20-day continues to curl up towards the 50-day. I do think we need to come back, retest that 50-day moving average before we can continue up. Tomorrow, it's Friday before a holiday. We are closed Monday. Historically, we are up the day before a holiday. Tomorrow, historically, 60% of the time on the S&P 500, 65% of the time on the Dow have been green days. So this is a different year. This year has been crazy with 7 consecutive down weeks for the S&P. Only 2 times in history has it been worse, and the Dow has had its 8 consecutive weeks in a row that have been down, and that's the worst since 1928. So historical hasn't been working much this year. But if things are getting back to normal, today will be a green day, but I would expect overnight action to be flat, a little dump in the morning, and then a rally at the end of the day. That's how I would see it. On SPY, this is the chart that I posted this morning. I really wanted to close over that neckline at 403.80, and we did. We closed at 405, over 405, which was a fantastic close, way over the neckline, way over the 20-day moving average. I still would expect on the S&P to do the same thing, where we come down, retest that neckline, and then continue back up to that zone at 420. That zone at 420 is where I think the major battle will happen. I don't think that that's the end of the bear market once we break that 420. Somebody asked me on the Discord today where we had to be to break the downtrend, and there's two downtrends that are clear here. There's this short-term one that has happened for the last 7 weeks right here, where it was a steep drop. That's where I would say we probably had capitulation, as you keep hearing. But the other channel is this big one with this purple line on top and this blue line over here on the bottom. In order for me to feel good about us being out of the bear market, we still have to break the 50-day moving average at 426. We still have to break the 200-day moving average at 444, and then the top of the channel, which is around 450 area. We have a long way to go before we're out of this bear channel. But as you could see, the things that we're looking at on the Discord, the things that we are anticipating, they are playing out. And if you stay attentive and engaged, you'll be able to get some good entries. The Nasdaq doesn't look as good as the S&P. We got right up to the 20-day moving average. The 20-day moving average rejected the Nasdaq and it retraced a little bit. So again, tomorrow I would expect to go over the 20-day moving average, retrace to the 20-day moving average, and then bounce up here to 306.56, which is the neckline that I want to break in order to create this nice double bottom and then continue up. The best of the indices is the Dow Jones. It's the closest to the top. It's the one that retreated the least. The Nasdaq retreated 31%. The Russell retreated 35%. The S&P 500 20.8%, and the Dow Jones was only down at its peak 18%. So now that we're past healthy candle closing past the 20-day moving average, there's a neckline right here that I want to close over. We did not close over that neckline. We did get up to the neckline and then we retreated from there. The reason I think that neckline is very important, as you could see, we were rejected here. We were rejected there. We were rejected there. It was our support there. We overshot it here and then came back over it. This line has been a line of support and resistance for a very long time, and we went over it for a little bit today and then we retreated back under it. So the possible scenarios is that we continue down from there, which is of course not anything any of us want to see. What I want to see is us going over. Oh, wrong candle. What I want to see is us going over, coming back down to test it, and then going up to the next line. That's the ideal scenario for the Dow Jones. A look like that for the Dow Jones will give me warm and fuzzies and make me feel really good about everything that's happening in the market. Still a long way away from being out of this bear channel. This bear channel is very big, but the economic data coming out is not great, but it's also not bad. The Fed minutes saying that they're expecting to stop hiking rates around September has given the markets a much needed positive boost. And I do think that once investors keep flowing money like they did today, you're going to have many more days like this where the heat map looks more green than red. So keep engaged on the Discord, keep asking us questions. You know that if you ask me a question on voice, if I don't answer on voice, it's because I'm probably speaking to somebody else on the phone. So type it out on the chat. I will always answer. If I don't see it right away, I have 3 screens that have the Discord. I'll make sure that I catch it on one of those screens. But there's a lot of other guys on the chat that are more knowledgeable than I am, more capable than I am, and we're always willing to help you out. So keep asking questions, stay positive. Remember, this too shall pass, and we will see you on the Discord.